ladies and gentlemen, some news that's coming in from the sugar sector because sugar stocks were buzzing in trade as global sugar prices surge and mounting supply concerns as Brazil faces harvest disruptions and Thailand cuts its production forecast. But in India, tight inventories and improving festive demand have pushed domestic sugar prices up nearly 20% in the month of August. Now, Avi is joining in with the latest trends. Avi, so of course, we've seen sugar prices reach nearly 20% and rise nearly 20%. And of course, on the back of that, what is the industry facing ahead of the festive season?
As Harsh rightly mentioned, the sugar sector has been buzzing, and we can see that the stocks have rallied in the range of 10 to 15% in the week gone by. That is on account of global supply crisis and constraints and the growing domestic demand. Talking about the US, raw sugar prices have crossed the key mark of 15 cents per pound and have now reached 16 cents per pound. Talking about Brazil, which is the world's largest sugar producer, has been facing adverse weather due to which their harvest season for sugar has been delaying. They've also suspended their bi-weekly production and harvest data for sugar, giving very limited visibility on the supply side of sugar. Thailand, in fact, has cut its production estimate to 9.5 metric tons, and the global sugar deficit is now being estimated in the range up to 3.3 metric tons. Talking about the Indian domestic market, we can see that the growing demand for sugarcane, along with higher ethanol production, also using molasses as a part of it, is now leading to growth in the sugar demand. Sugar exports, however, remained restricted until the 30th of September. And even after the restrictions are lifted for exports, we can see very limited exports being done from India with respect to sugar because we have a lot of domestic demand to meet too. The domestic sugar prices have skyrocketed by almost 20% in the month of August alone. The inventory produced at around 37 rupees per kg now sits at around 47 to 55 rupees per kg, making some huge mega inventory gains for the sugar players in play. We can see that the inventory gain will help companies with better EBITDA margins, strong cash inflows, and of course an earnings upgrade that could come. Talking about the embedded total gains would range in the almost in the range of 500 to 800 crore rupees, and the Q2 to see inventory gains in the range of 100 to almost 250 crore rupees. The top beneficiaries would be Balrampur Chini, Triveni, and Dalmia. There are also reports that suggest the government is planning to cut absolutely the 100% sugar import that is applicable as of now to better make sure the availability of sugarcane in India and to support the growing demand in the domestic market. So all in all, we've seen that the sugar stocks have skyrocketed because of global supply constraints and the growing domestic demand, as it is also used in ethanol production.